But if this starts to reach about $110,000, if we start to see the funding rates again, maybe turning negative or a lot more neutral, we see a decreased amount of profit taking from long-term Bitcoin holders. All of this would kind of point towards the market potentially getting to a point where it's looking much more favorable for some accumulation, much more favorable risk to reward for trying to actually buy in once we've got confluence from multiple data points, all saying that maybe this time of consolidation is over and we can actually now continue to hopefully regain new all-time highs.
Interesting. And I guess the question everyone wants to know is like what will be the top this cycle?
I'd love to know.
where are we ending up this year? It's crazy, the speculation on that. I sometimes put out community polls of like, hey, where do you think the price is going to be topping out this year? And from I think like 500, 600K was the highest ones. I mean, there are like crazy ones, but like most of them are the highest ones on the 500K range, and the lowest are like 130. Like we are almost there with 130. I mean, there are of course bears that saying like, oh, it already reached the all-time high. How do you look at that?
So of course, the $1 million question, I'd love to be able to answer and say this is the price we're going to peak at, but honestly, no one truthfully knows this. Like I said previously, if we're starting to see a lot of the data points point towards a market cycle top, whether that price is at $130,000 or $500,000, at that point I will be taking action. But that's a pretty boring answer. A much more exciting answer is to actually give some ideas. So based on the previous cycles, based on the diminishing returns we're seeing, my base case is probably somewhere around $170,000 to $180,000. Now this changes based on the data that we're seeing. If we're seeing a huge amount of profit taking that was maybe a little bit earlier than expected, then I'd maybe drop that to 150, 160. If we do see a huge amount of accumulation from potentially a Bitcoin strategic reserve, then again, all bets are off. Who knows how high we could go. So I like to think in terms of probabilities. 170, 180 would be my base case. I could see an ultra bull case, but to be honest, I'm seeing this being less and less likely as the cycle progresses, of somewhere around $220,000, $240,000. And again, a more bear case, I guess, of $130,000 to $140,000. You also have to acknowledge that Bitcoin is still very much correlated and influenced by traditional markets. We've seen a pullback in the S&P 500, again, coinciding with Bitcoin having this little bit of retracement. If we were to see a big global recession, a big drawn-out bear market in equities, then Bitcoin is going to struggle. We haven't seen any evidence of a prolonged decoupling where Bitcoin moves as an independent asset, can maybe fulfill its narrative of being a hedge against bad monetary policy, but ultimately, at the minute, it does still look like we are currently acting as a high beta or a high leverage play of US equity markets. So it is still very much a speculative and risk on asset. If we can continue to see equity markets trend to the upside, then Bitcoin's likely going to do it incredibly well. But we are still, unfortunately, at the whim of what other markets are doing. So it's one of these. It's more just a gut feeling, a more personal interpretation, just looking at certain things on the charts, looking at certain patterns in the data to say around $170,000, $180,000. But yeah, ultimately no one knows. And if we see the sell signals at 150 or 500, I'll be taking action.
Yeah, it's more about like seeing all the signals of like, are we moving upwards or downwards? And also, as you pointed out, even if everything points to selling, if there is a big market participant coming in and saying like, I don't like what happens if all the signals are saying sell and then Apple comes out and says like, oh, we are converting 10% of our cash balance to Bitcoin. I mean, at that point, all the signals all of a sudden change. So Bitcoin is always this it's small enough to be changed by a big player still, even though we came a long way. And if you look back at like 2017, we were like such a small asset. Now we are like trillions of dollars worth. So it's like we've come a long way. It takes a lot more now to move Bitcoin than like just 5 years ago. 5 years ago, like if Apple would have moved into Bitcoin, I think like it's a straight up line. Now it's, I think, still a straight up line, but it takes it takes now a really big player to actually move Bitcoin and to actually influence the price and the market in there. And it gets more and more unlikely, I would say, that something extraordinary is happening because we already have huge players with BlackRock and Strategy and big other companies in the game. I talked about that, I think, a week ago or something like that, where 2020, it was very big news when Square bought $50 million of Bitcoin. Now, if any company buys $50 million of Bitcoin, nobody cares. It's like it's a normal day. So I think it's interesting. Those tools might actually be like more and more predictable, as individual small decision makers actually don't have that big of an influence on the market anymore. How do you look at that?
Yeah, and I totally agree. Of course, if Apple come in and say we're buying 1 million Bitcoin, that's going to change the dynamics to some extent. But like I said previously, the more things change, the more things do typically seem to stay the same. So there's a few different things we'll consider. But first, we'll just look at this chart, which is the realized cap hodl wave. So this is taking into account the realized cap or realized price, like we showed with the MVRVZ score, this price here, the average accumulation price of all Bitcoin on the network, which is around $50,000. The average investor paid around $50,000 for their Bitcoin. But if we go to the realized cap hodl waves, we can look at the percentage influence of different market participants on this price. So this is essentially retail FOMO in action. When we have these very red, warm colors indicating investors in the last 24 hours up to, say, 1 month, this gives us an indication of new people coming in and paying considerably more for their Bitcoin than historically was the norm. And again, the market is just supply and demand economics. Even though it's great to see strategy accumulating all of this Bitcoin, even though it's amazing to see these ETFs pouring billions and billions of dollars in, realistically, still around 80% of all Bitcoin in circulation and active Bitcoin in circulation, so we're accounting for kind of lost coins and stuff as well a little bit there, is still held by everyday participants like you and I. A vast majority of Bitcoin is still held by individuals and still have a majority influence on the potential price action of the upcoming days, weeks, and months. So when we see a huge amount of people rushing into the market, again, good indication that we're potentially getting a little bit overheated. If we are to see Apple or someone start piling into the market and we see this huge influx of retail FOMO, where are Apple buying that Bitcoin from? The only way that they can actually buy 1 million Bitcoin is if there's 1 million Bitcoin willing to be sold by long-term holders who have been holding for multiple years, who are realizing that, hey, maybe this is my exit liquidity. Now that kind of brings me on to the second talking point. If someone wanted to buy $1 million, 1 million Bitcoin, say a Bitcoin strategic reserve came around as well. Bitcoin is still a relatively small asset. I know we like to say it's huge and it's grown exponentially, which it has from just a few $1 billion to a multi-trillion-dollar asset. But realistically, there is just not that much circulating supply of Bitcoin ready to go around. We are still a fairly illiquid asset. If we just look at the normal hodl waves rather than the realized cap hodl waves, so this is just not looking at the influence on the realized price or the average accumulation price of Bitcoin, but just the percentage of Bitcoin held by different age bands. What we can see is if we move all of them up to, say, the 6 months, so the short-term holders, we can see that there's still only around 20% of Bitcoin that's actually readily to move. That's actually moving on a biannually basis, which just shows us that even though we have seen a huge increase in the Bitcoin market cap and we have matured massively as an asset, there's still not that much liquidity to go around. If someone wanted to buy 1 million Bitcoin, they're going to have a real hard time doing so without causing a huge amount of slippage and seeing the market jump up probably hundreds of thousands of dollars. You can almost see this as well as a rough money multiplier effect. If we're seeing around 80% of Bitcoin not really available, only 20%, then every dollar that goes into the market likely is going to increase the market cap by about $5. So of course, big investors are aware of this. Smart money aren't just piling in at whatever price, pressing the market buy button. If we are to see further accumulation, which I believe we will from potentially more treasury companies, other companies like Apple potentially putting on their balance sheets, then we are going to see a very positive influence on the Bitcoin price action. But it is likely going to be trickled in and cause, again, even more price action like we've already seen of this kind of long, choppy, sideways consolidation as this price action is scaling in before these big explosive moves to the upside. Again, just diminishing the volatility, taking advantage of these 20, 30, 40% dips. And when that happens, we'll be able to see by looking at the on-chain data that a huge amount of capital is coming in to actually purchase Bitcoin at these lower prices. But so far in this cycle, we haven't really seen this smart money acting very smart. They're still susceptible to the same feelings and emotions that we all are, because all this data is really showing us is the mass psychology of investors just quantified.
It's super interesting to think about that situation of someone in the market, no matter who this is, wants to buy 1 million Bitcoin and they're moving as aggressively as possible. Say, like, there are not a lot of players in general that can even do that at that point. I think Apple and the US are two players that absolutely can do that over time. But it still would be so hard. Because you just described it, and I've never thought about it in particular, because if you have a player that is big and public like Apple and US, like Apple cannot buy for long without someone noticing. Like, latest at the quarterly calls, like it has to be disclosed. I don't know how long, what's the maximum duration they can buy without them having to report it, and for without them noticing something. That alone is a challenge. I think like the maximum is probably like 3 months, maybe shorter than that. I don't know how the SEC and the Apple things work in that regard, but they cannot do it for a long time. So if there's a big player that really wants to accumulate, they have to say it. They have to say why they're doing it. It will be extremely bullish from a news cycle. And then they're trying to buy a lot of coins. Like Apple does not want to have like 10,000 coins if their strategy with like 500,000 or like 600,000. So they likely want to be the top dog in the game, also with the coin. So that's a super interesting, like the supply and the demand. Like I think if Apple does it, I think I have to have you daily on. It will be super interesting how the supply and demand equation changes, and how hard it will be for them to even do that.
Yeah, I mean, like I said previously, these big institutional players aren't looking to buy 10,000 Bitcoin, because what's 10,000 Bitcoin to Apple? If they have trillions of dollars potentially of spare cash, they want to put X percentage of that into Bitcoin. And unfortunately, if that's going to move the market 50%, if they just put 1% of their, spare capital into Bitcoin, then it's not really worth it for them. So Bitcoin supply and demand economics actually grow more favorable as price increases. People would think the cheaper it is, the more it's kind of enticing for people to accumulate at a discount. But especially, like we said, for players like Apple, we really need to see Bitcoin at hundreds of thousands of dollars and a multi-trillion-dollar asset before they can even really consciously do it without having this huge influence on the market. So it's one of these really bullish things where the more we see the price go up, the more bullish I get, which is kind of counterintuitive. But over the long time scale, over the next kind of 5, 10, 15, 20 years, it's exciting and kind of unimaginable to believe where we could be in the market, where every single index fund, every single investor is having 1, 2, 5% of their portfolio into Bitcoin. And suddenly that opens the door to tens of trillions of dollars of inflows. And then again, like when we look at something like the money multiplier effect, this has this massive increase in the market cap far beyond the capital inflows that we've seen.
And it unlocks new capital, which is an interesting equation. We know with players coming in like Saylor, he builds those tools to unlock locked capital, and with a higher price at the same time, we're not only getting more interesting people in from the traditional financial space that build those products to get more money from all the other markets to Bitcoin, but also it gets to be a big liquid market where then all of a sudden the pension funds, the Apples of the world, can join and say like, hey, we can buy and sell things in this market without crashing and booming the market. Because Apple does not want to be in a situation if they decide to buy 1 million Bitcoin and then sell like 200,000, that they buy, the price shoots up, and then they sell, they're like, they have to so carefully sell to not dunk the market. And we've seen that in 2021, where at that time, I think the richest man alive, Elon Musk, bought and then like dunked on Bitcoin, and we literally just like went up and then back to the same point again. And I think now we are way more stable, but maybe we are not stable enough for an Apple player, Apple-like player. I mean, people keep saying like Tesla is already in the game, but I don't know. Like it's a different player. I know Tesla is a huge company. They are fast growing. They have really good potential to be an Apple or Facebook or Google of the world. But they're very different from the structure of the management team and from the overall financial structure, because Elon Musk can just decide things at
Yeah,
Tesla. Like Apple, Tim Cook is not in control alone of where Apple is going. Even if he wants to buy Bitcoin, and we know that he has Bitcoin in his private portfolio, he said that on interview. But if he wants to do the same thing for Apple, it's not that easy to just like, oh yeah, let's buy it tomorrow. Like that's not happening.
Yeah, I do think, of course, I'll just share some more charts here. We have actually, again, seen kind of this steady shift already. This is looking at the amount of addresses on the Bitcoin network that are holding at least 100 Bitcoin. And we can see that this is continuing to climb to new all-time highs. So clearly we are getting there. We are progressing to this asset, which anyone, regardless of their wealth, is able to scale into without having this huge influence on the underlying price of Bitcoin, which is very promising to see. But one other thing, like we said, maybe Apple isn't quite ready yet. But looking at treasury companies, other treasury companies, we can see that we've already opened the door to hundreds of billions, well, $105 billion worth of capital inflows from public companies already. And this, again, is just continuing to grow. Of course, Strategy is leading the way with nearly 630,000 Bitcoin. But we can see nearly 1 million Bitcoin has been accumulated by these treasury companies in just the past couple of years. And it wouldn't surprise me if in a few years' time this number is, well, 2, 3, 4+ million Bitcoin accumulated, because again, people are starting to wake up to the Sailor playbook. People are seeing their purchasing power by holding the US dollar or other fiat currencies continuing to diminish. And especially if you're a company that maybe, I don't want to be mean, but maybe isn't succeeding. Realistically, Strategy, of course, they have their underlying software business, but they're a Bitcoin company now. The revenue from their underlying business model is minimal compared to the tens of billions of dollars worth of Bitcoin that they have. And for other treasury companies coming in, this is a really good way to potentially open the door to more liquidity coming in, to higher share prices. People, get excited about a Bitcoin accumulation strategy. And again, we're seeing this through Metaplanet, we're seeing this through the blockchain group, we're seeing this through lots and lots of companies who are now seeing the potential of doing this, again, not just to see their share price massively increase, but especially just to prevent diminishing capital on their balance sheets being held in fiat currencies. So it is interesting to see, and I think Sailor really is opening the door, especially with the new derivative products like the Stretch and Strike and Stride, etc., all coming out and just really opening the door to the bonds market, and the new STRC opened the door just to the liquidity market, potentially acting as almost a stable coin for new capital to flow in to accumulate Bitcoin. So it's really exciting to see, and all these new products coming out is just unknown territory. I mean, this is just something we've never seen before, something that hasn't really existed before. And it's great to see all coming out. I will put a little asterisk next to that and say, when we have the inevitable bear market, which is going to come, every market class throughout history has had boom and bust cycles. When we do see this 30, 40, 50, 60% bear market, who knows how all the other treasury companies will survive. I think that's going to be the true test of how committed they are to the Bitcoin playbook, and how much they can actually withstand in terms of drawdown before shareholders start asking questions. But it is interesting to see, and it is interesting to imagine how the supply and dynamics are going to continue to play and evolve throughout the coming years.
Is this actually something that you're seeing? Does those products like the Stretch and the Stride and the Strive from Strategy, and maybe even other treasury companies, do they change things from your perspective, from on-chain, but also other data points that you're seeing, or do you expect that they will change something in the coming years?
So, I mean, we're seeing, if we look at something like the addresses holding 100 BTC increasing, that's obviously something we can track in real time. But realistically, all of these treasury companies are accumulating and holding through centralized custodians like Coinbase. So it's not like we can see every single transaction happening and the underlying ledger of how much Bitcoin is actually being held by Strategy and what their addresses are. That data just isn't publicly available yet. But we are seeing the spot markets being shifted by this continued accumulation. We are seeing the circulating supply, not the actual circulating supply, but the circulating supply that is available for people to accumulate when looking at something like the hodl waves, continuing to diminish. So we are seeing the effects of this happening. And like I said, this is actually great because everyone points towards on-chain data potentially breaking and becoming less useful going forward because of this accumulation. But if you look back to 2016, 2017, when 70% of all volume was happening on centralized exchanges like Binance, it's not like we could really see what was happening there, but you look towards the on-chain data and it still worked incredibly well. It's almost like a census. If you're trying to gain some insights into how many people watch a certain TV show, how many people listen to this certain radio channel, you don't have to ask every single person in the country. You only have to ask a select few thousand, and suddenly that gives you enough kind of insight into what's happening. So we don't have to know exactly what every single investor is doing, but if we can see a general trend that majority of the network's active users are beginning to take profit or beginning to accumulate, then we can really start to take action on that. So I think it's very promising that we're seeing this kind of shift in dynamics. Like I said, it gives us another point of confluence that we can see. But realistically, all of these coins being put onto Coinbase potentially opens the argument of paper Bitcoin being transferred and all of the Bitcoin being accumulated by these ETFs. Are they ever really hitting the open market again, or are they just keeping their own centralized ledger internally? Again, who knows? We can speculate and we can talk controversies, but ultimately, I think, regardless of all of that, the data is still being very clear and obvious, and it is still showing us exactly how the market is actually evolving.
That's all super interesting. It's one thing that came to my mind. Maybe it's like a little bit off topic, but I know people are super interested in that too. When you saw how many addresses have like 100 Bitcoin or more, what does it actually take to be in the top percent of Bitcoiners? Have you looked into that, of like seeing like, okay, if you wanna, like, because like those stacking goals are really popular and people are like, oh, I want to get to X amount of sats. Do you have something to show of like how many Satoshis, how many Bitcoin, whatever the thing is, to get in the top 1, top 5, top 10, whatever percentage of Bitcoin hodlers? I mean, of course, this changes over time as Bitcoin gets more mainstream, but do you have something like that?
Good question. No, we actually don't. So I'm actually just cheating and looking this up now. So to be in the top 1%, you'd need to be somewhere around it's a pretty wide range of 1 to 10 Bitcoin. But if you're holding at least 1 Bitcoin, you're in the top, 2%, let's say. So again, I think this is a thing that a lot of people historically have really focused on, is I need to accumulate 1 Bitcoin. And I think for everyday retail investors, that is great. I do think that is a good goal to have, because eventually 1 Bitcoin potentially could be your entire retirement plan. But a lot of the new market participants are coming in and having this narrative shift into a portfolio asset, saying, I don't need to have 10,000 Bitcoin, I need to have 10% in Bitcoin. So again, if you have someone who gets paid in fiat currencies, it can make sense to just dollar cost average in and just hold X% of your position in Bitcoin. As much as I hold 100% in Bitcoin, I wouldn't suggest it for the everyday investor. I think that there's certain people that have a risk tolerance that's a little bit tamer than ours, we'll say. And again, especially if you're a little bit later in life and you wanted to maybe have a little bit more of a steady retirement plan without big 50, 60% drawdowns, then maybe you don't want to go 100%. But we can see by the data that holding X percentage of Bitcoin massively increases your performance. And it doesn't have to be a huge amount. Even if you're just dipping your toes into the water, 1% of Bitcoin can massively outperform a 60-40 portfolio of equities and bonds if the rest was just in cash historically. So it's unbelievable the outperformance you can get from holding Bitcoin as an asset. And especially if you wanted to take that a step further, there are assets like Strategy and their derivative products as well, which can offer slightly different exposure to the market. So there's lots and lots of different avenues you can take. I don't necessarily think that just focusing on X Bitcoin is the right approach, but of course, you do you. I just think it's great that people are trying to actively learn more about how to preserve their wealth and try and accumulate more wealth through Bitcoin, through these products, rather than just historically, being taught, put everything in the S&P, let it do its thing, or, don't really acknowledge the detrimental impacts of the inflation rate increasing and the decreasing purchasing power we're seeing, year on year. So in general, I think it's a good thing. But yeah, back to the original question, in terms of the percentage to actually reach certain thresholds, I can't see. And the reason we actually don't have that is it's a slightly warped metric, we'll say, because someone could have 100 Bitcoin but keep them in 0.5 BTC wallets and have just a couple hundred of them. So it's impossible to really aggregate all of that and understand exactly how much Bitcoin every investor has, because anyone can create a wallet and just add, a few Satoshis to it. But ultimately, just do what you can do within your risk tolerance. Understand that we are going to have these boom and bust cycles.
Yeah, I think it's a good way to look at it. And it's also those, like, if you look in the history of, like, let's go back 10 years and someone would have said, oh, you need to reach like 50 Bitcoin or like 20 Bitcoin. And that would have been probably great advice like 10 years ago and probably achievable 10 years ago. But the even better advice is like study Bitcoin as hard as possible. And then once you understand it and you're convicted about it, go balls deep. I think that is probably even like better thing, because maybe then 10 years ago you wouldn't have bought 20 Bitcoin, which is an amazing amount, which is like probably more than most people will ever have. But if you would have actually studied Bitcoin deeply, actually made your conviction and actually pointed to like, oh, like what else would I hold outside of Bitcoin? Maybe you would have bought 100, 200, maybe 1,000 Bitcoin. I have no clue what the price was in 2015, but I guess even like 1,000 Bitcoin was back then kind of reachable. So it is interesting to think about those strategies of like, oh, get to X amount of Bitcoin. I'm like, yeah, get there and then don't stop. Keep going. You keep going. I always regretted not buying more early on. And I think almost everyone does.
Yeah, I was going to say, who doesn't?
who doesn't? So yeah, but yeah, I think one Bitcoin is an interesting goal nowadays because it's still achievable. I would guess for most of my audience, they either have that, or it might be achievable. It's always like hard to say, but like I think it's like one Bitcoin is still for the Western civilization, and I know like most audiences from America, UK, Canada, Australia, Europe. For most, it is achievable, and I know that because if you look at the average wealth a person has in those countries, it's over 100K. So if you really are convicted of Bitcoin and you have a house, you have this and that, like you could go balls deep into Bitcoin, sell everything, and you could reach that one Bitcoin. That's why I'm saying, like, if you go balls deep and if you really think, you could actually go ahead and do that. But I think most people are not prepared to sacrifice so much just to get to one Bitcoin.
Yeah, I mean, we actually have the data of how many wallets there are holding one Bitcoin. And again, I said it's not a perfect data point because you could hold 0.5 Bitcoin in your own wallet, 0.5 on a centralized exchange or in ETF or other products. So it's not an exact science, but we can see it's actually been diminishing over the past few months, potentially due to the ETFs and other avenues for people to gain exposure to the market. But it's somewhere around 1 million different wallets holding one Bitcoin. So it's, yeah, definitely achievable, but I don't think it's going to be achievable for too much longer for a vast majority of people. But one other data point I think has been really interesting because a lot of people say to me, you know, if we do see this super cycle, we're never going to see this big drawdowns. We're never going to have the opportunity to buy back in lower. I think a lot of people are worried that if they do take profit on even a small portion of their Bitcoin, that might be Bitcoin that they can never reasonably regain, that they can never accumulate again because the price is going to continue to accelerate away from them. So, as I said, if you don't want to sell your Bitcoin, you don't have to sell your Bitcoin. That's great. You do you. However, I've done some analysis in this. So, what this is showing us is on this chart, it is the percentage probability of being able to buy Bitcoin back at a lower price. So to actually just take this into account, I did this analysis at the tail end of the previous bear market. And I looked at any day we were above the 1 year moving average of Bitcoin. So this is the red line here. So literally just the 365 day. If you sold on any day throughout Bitcoin's entire history above the 1 year moving average, you had a 50-50 chance of being able to buy back in 39.5% lower. So of course, that might not happen this cycle. We can see in the screenshot here, in the last cycle, we had nearly a 78% drawdown. If we are seeing diminishing volatility, that might only be 40, 50, 60% in the next cycle. But there is always going to be boom and bust cycles. And the fact that it was basically a coin flip chance of being able to buy back in 40% lower. And again, this is just any day above the 365-day moving average. You could have sold, it's a bit off the chart here, but down here at kind of $10,000. And of course, you wouldn't have had the opportunity, but it's taking into account every single day of Bitcoin's history. You had a 50-50 chance if you sold above the 1 year moving average. Now, if you take into account the other data points we have to really see when the market's getting overheated, to see when retail are FOMOing in, to see when long-term whales with huge amounts of Bitcoin are beginning to take some profit, to see when the institutions are maybe getting a bit ahead of themselves, see when people are over-leveraged and you can start taking profit to these upper regions towards a bull market. Again, you don't have to be perfect. And everyone likes to think, oh, I'm just going to sell 100% right at the peak. That's pretty much impossible to do. Everyone advises dollar cost averaging in or scaling into your positions. Just do the same for getting out of your positions. Dollar cost average out. Start to scale out, take some profit gradually as Bitcoin's price is moving higher to lock in as high a price as you can. And there's a decent chance, if you can time the market even semi-well, that you're going to have a really good opportunity to buy back in potentially at significantly lower prices.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.